Hello, I'm Nadine Dereza and welcome to Lunch with Sibos. Every day we're bringing you the Sibos Game Changers, interviews with thought leaders and influencers from the world of finance and beyond.
And we'll also be speaking to experts discussing the hot topics affecting the industry. First up, developments in instant payments in Europe.
The rollout of instant payment services across Europe is starting in a few weeks, with the launch of the scheme setting the rules for handling euro credit transfers in real time.
Well, instant payments will require new sets of rails to run on. Some of the infrastructure initiatives providing those rails focus purely on one country, and others will operate across the whole region.
And here to tell us about the two emerging pan-European instant payment systems are Marc Beldegesset, Head of Directorate of General Market Infrastructure and Payments at the European Central Bank.
And joining him we have Hayes Littlejohn, CEO of EBA Clearing.
And also here is Isabelle Olivier, Head of Securities Initiatives and Payment Market Infrastructures for EMEA at SWIFT.
Welcome to SibosTV. Isabel, if I can start off with you, can you set the scene for us in terms of what is happening for instant payments in Europe?
Sure. Well, instant payment in Europe is really something that's going ahead. So it's not a question of going or not. Actually, the movement has started. The banking community has decided to go ahead. And next month, as you mentioned before, will be an important milestone for this purpose, since the European scheme for instant payment will be officially launched on November the 21st. So what we do see now is, since that publication of that scheme 1 year ago, multiple markets getting ready for this important challenge, and ACH is actually developing solutions for their community at regional level, at domestic level, or at pan-European level. So everything is moving into that direction.
And Hayes, if I can turn to you, EBA Clearing is going live with instant payments in a month from now. So just be interested to find out how the actual preparations went for this.
Very timely indeed. We've started the project about 2 years ago, and we went for testing in January of this year. First banks were testing in April, and it was really of critical importance to get that testing infrastructure up and running so the banks could prove out their own infrastructure. The other thing is we've enjoyed the support of 39 funding institutions who helped us build it, and also the very constructive support of SWIFT, of SIA, and also of the ECB.
So you're pleased with the preparations?
Very pleased, thank you.
Very good.
What about your expectations for the go live? Which are some of the banks that you've lined up?
Well, each bank is going to move more or less at their own pace. It's an optional scheme. But we have, I'm proud to say, approximately 25 banks that will be going live with us in November with the scheme. We expect that by June next year, it'll be around 50 participants, and by November, around 100 or so. So pretty good for an optional scheme.
And Mark, I know ECB also decided to launch their own solutions recently as part of the Euro system. So just interested to find out what were the key drivers behind that decision.
Well, the ECB has been very supportive with the establishment of the SCTE scheme from the start, supporting all the political process to adopt such an instant scheme for Europe. So instant payment can really flow into Europe. And so through the work done in the Euro Retail Payment Board, we have pushed very strongly all the stakeholders to be there today. So we are very happy to see that EBA, SWIFT, and the banks will come into the scheme now into Europe to deliver a solution. We saw, however, that to be sure that we have one integrated financial market, we needed to come with our own solution for the settlement part of it, so that we have the backbone behind, which in association with the other provider will really deliver instant payment to the citizens of Europe.
So how will this complement other initiatives, such as the one from EBA Clearing and others that choose to go live?
Yeah, it will articulate completely the regional and domestic challenges in different countries together with one euro area, pan-European domestic market infrastructure. So it's really working together, giving technical solutions and possibilities for banks to channel their payments wherever they are and to reach all possible citizens, so that all people using it in the commerce or in the today exchange that you need to do payment will be feasible all over the area. So it's really coming together.
Now, Isabel, SWIFT announced that it will play a role in instant payments in Europe. So how are you actually supporting the solution of EBA Clearing and ECB?
Actually, we've been working together to make sure that we do provide an easy access to the services of these two platforms, reusing the network capacities of SWIFT.
What about plans to support other instant payment solutions in Europe? Are there some?
Yes, indeed. Well, we'll follow the requirements of our customers, and we are indeed in discussion with other CSMs, so other platforms, to make sure that the same generic channel can be reused across as many CSMs as possible. So that's coming, I would say.
And hey, soon we're going to see 2 pan-European instant payment systems and several local CSMs. So what impact do you think this is going to have, in particular, on the overall clearing and settlements landscape?
Well, our users have always told us that it's really important to have 2 complementary pan-European systems available to them for lots of really good reasons. We have a long history working with the ECB together with the high-value payment space with Euro 1 and Target 2, and we see no reason why this can't also develop for the instant payments space. So it's critical that we work together.
Well, we understand the ECB will also be providing the TIP solution in 2018. That's the Target Instant Payment Settlement Service. If instant payments grow as in other markets, will there still be a need for a high-value payment system?
Well, yes, indeed. Instant payment is one thing, which is mostly focused on what we call the SCT, so the securities, the standard credit transfer, for SEPA. But instant, which is typically for retail payments, so for small value payment, and a very simple service, which will just deliver money, central bank money, on settlement just straight in a simple way. In the RTGS functionality, real-time gross settlement that we are delivering for large value payment, wholesale payment, you need much more sophisticated processes allowing optimization and generation of liquidity where necessary, so that large value payment can be processed also real-time and within the support of the money market time. So the timing is different, the technology is different, and the targeted customer are different. So yes, we still need to have 2 different lines of services, even though the trend towards more real-time processing is coming together. Still, you have different product lines necessary in the field of payment.
And Isabel, how will your customers actually benefit from SWIFT's overall offer?
Well, actually, I think the great benefit of using SWIFT is that we will allow clients to cope with these new challenges of instant payment while reusing the infrastructure they have in place today and they use with us. So I think the reuse and the possibility to join through a single channel which they know and a trusted partner, SWIFT, to access actually as many potential providers as possible. These are great benefits for our customers, we believe.
Absolutely. Just to widen it out a little bit, while we're in Toronto, it's not only about business, is it? So what else are you looking forward to about Sibos being here in Toronto? Mark, can we start with you?
One of the big topics, and somehow related to instant payment also, is that instantaneity of our society, digitalization of society, creating new challenges. One of the big topics this year, I think, is cyber threat, cyber resilience. So I think a lot of discussion around Sibos will be about that. And instant somehow is a challenge in this context, because you have to instantly check against cyber threat the way payment are processed. So new challenges, I guess, that we can share with my colleagues from EBA Clearing or SWIFT. So this question probably will be at the heart of the Toronto Sibos this year, I think.
Well, you mentioned earlier that there were 2, Mark, you mentioned earlier there were 2 payment platforms, one for the large values, low value. Does that complicate things further because they're different platforms for different people? I mean, there are more, more options available, which makes it difficult, more challenging for banks to sort of service customers.
So I don't know.
Anyone can answer.
Go ahead.
Please.
Yeah, no, not really. In fact, because the complexity of Europe, we are in a special context where you have national systems all over Europe which are there today, fragmenting the market. And those solutions that we are bringing, which are pan-European, are bringing together those national segments. So yes, there is different offer for different products, but that's normal because there is different needs. But what we need is to bring them at the level of a domestic euro area level, and that is a challenge. So we are somehow simplifying by putting together different services, but at the higher level, European level.
And Hayes, from your point of view, is there any other sessions that you're interested in finding out about while you're here at Sibos?
Clearly, cybersecurity is also a key topic for us for the same reasons. And to answer your question also a little bit, the high value and low value, we run both. It's a different, maybe slightly different in terms of the way that banks connect to the 2 systems, although in both cases it's network agnostic. but we still have to defend on all fronts. So it isn't that different. We have to apply the same principles in both cases. The other things that we're looking for at Sibos is, moving into real-time payments means new challenges for banks and for their customers. It's cashless cash. As soon as that payment is gone, it's gone, just like cash is today. And there are other kinds of safeguards that will come on top of that, things that we have to look at together with banks, solutions that banks will be looking at for things like fraud control, money laundering prevention, and these kinds of things that they have to comply with.
You're in the right place. Isabel, the same to you.
Well, I think it's going to be a great opportunity for us to understand as well where the world is moving, where innovation can play its role, and where in the payments landscape, high value, low value, but also GPI and the correspondent banking can come together for the benefit of our community.
Well, thank you very much for your time here. It's been a real pleasure to have you here on SibosTV, and enjoy the rest of your time here in Toronto.
Thank you.
Well, now it's time for the first in our series of Game Changer interviews on a subject at the top of the agenda for companies looking to innovate. What am I talking about? Artificial intelligence, or AI, as it's often referred to.
I mean, we often throw the name around AI. More and more we're hearing it, from online search tools to automated assistants like in Amazon's Alexa, and driverless cars as well.
And the financial industry is no different, exploiting AI with new products based on machine learning or some component of AI.
So earlier today I had a chat with Clara Girodi, CEO of the Cognitive Finance Group, an expert in applied AI, and began by asking her to help us understand in plain English just what AI is.
Well, AI has been around for about 50 years, and computer scientists, they have their own definitions, and there are quite a lot of definitions, and I don't think there is a consensus as to what AI is. But today I'm going to give you our own definition, which is focused on understanding applied AI in financial services, because we are here at Sibos and we talk the future of financial services. So we need to look at AI in terms of the tasks which it can do. And through that lens, I could say that AI is the theory and development of computer systems able to perform tasks which normally would require human intelligence to perform, like speech recognition, video perception, or visual perception, or decision making under uncertainty. So with this in mind, we always need to look at how AI can help us in the work we do in financial services, because otherwise we just talk a little bit like in abstract, and we don't want that.
And that's what we're looking for, to see how AI can be actually applied in our day-to-day lives, in the transactions and the services the banks offer. There are many other buzzwords. I know we talk about machine learning, neural networks, deep learning. Do they mean the same thing as AI?
No. Well, they're each of them are a subset of the other one. So think of AI as a basket of technologies, and machine learning is part of AI. So some people say AI and machine learning, which is exactly probably saying like, I like dogs and golden retrievers. So it's a repetitive, unnecessary repetition. So they are subset of each other.
Okay, so artificial intelligence is the bigger umbrella.
It's an umbrella term.
Right.
Yes.
And what are the benefits you see most for banks in wanting to apply AI to their services?
Well, there are practical benefits and particular benefits, and there are general benefits. When it comes to practical benefits, we are looking at what this technology can do for the work we perform every day, and anything to do with personalization, decision, insights, efficiency, and trust. And I'll come on to that point immediately. So when it comes to all these points, when you want to scale everything, personalization, decisions, efficiency, insights, when you want to scale them, then you can use technology, artificial intelligence, and that will help. That's one of the main benefits. I said also trust.
Yes.
And tomorrow, during my session, I will try to, and I will succeed. I'm convinced. I'll try it though.
Okay.
I'm optimist. Tomorrow, I shall try to show how we can use this technology to rebuild or build the trust our customers and investors have lost in our industry. I still speak as a practitioner because I've done my bit, and I used to be a practitioner in financial services. So trust is an element. It's the beginning and the end of everything we do in financial services. According to myself.
Well, it's true. If I don't trust the system or the services, I won't use them.
Yes, absolutely. And I think there is a deficit of trust in financial services, which this technology can address.
Right. You know why? There have been too many Hollywood movies showing what AI would do with robots and take over the world, and it's scaring all of us. So.
Oh yeah, no, absolutely. But I think there is an angle to it which we should not forget, because this technology can help us do our work better in financial services, but also get closer and rebuild the trust we, in some sectors, have lost.
Okay. Well, the thing is, for many banks, the infrastructure from legacy systems are there. Will it be a big challenge for them to adopt this new technology? Will it be a large cost investment as well?
Well, let's put it this way. It can take, any investment is it's some money which need to be spent, some resources which need to be spent. Now, do you want to spend those resources on something which will bring you benefit long term and keep your business going for many decades to come? Or you rather not spend that money and put your business at risk, your shareholders at risk, your employees at risk? Because my submission is that when this technology is not adopted, every day of delay, then it's a week, it's a month catch-up work those laggards need to do when they will decide finally to adopt this technology.
But will AI be relevant to all the banking functions or only selected areas?
There are anything which is repetitive, we can use AI on. So when you look at all business processes, like we have done in our consultancy, we have looked at business processes across the front office, middle office, and back office, and every single of these processes we have analyzed. We have identified AI systems which can solve those problems.
Is that as far as it can go? Because we know that robots can do the day-to-day, the stamping, the packing, the simple tasks. But there are reports that say that AI will surpass human intelligence by 2019. I mean...
Well, okay. I think AI has surpassed human intelligence in certain functions. Machines are better at identifying and recognizing photographs, images, than humans are. And that's something which has already been achieved. Now, overall, to say that in 2019 this technology will surpass human intelligence in general terms, I think it's not the case, at least not in 2019, according to my own predictions.
Okay, but in selected areas which are specific?
In selected areas. And you have expert systems. They've already achieved better outcome than humans many, many years ago. So in certain processes, the system AI has already achieved superior outcome to human intelligence.
Which means in those areas where people are now working, they may not have their jobs anymore. So there are concerns. I mean, which are the jobs that will stay? Which are the jobs that will go?
All right. So this is a very, very good question. Everybody asks this question. So thank you for giving me the opportunity to actually answer this question. Well, as far as businesses in financial services are concerned, this technology is the key to keep those businesses going. If the businesses are going, it means that people will have jobs. If businesses won't adopt this technology in order to make them competitive and keep growing and compete globally, then those businesses will disappear. As simple as that.
Right, so you're saying...
So what I'm saying is that this technology is actually the key to business growth. I refer to it as the modern day alchemy of business growth. You want to grow and you want to retain your business, then you need to invest in this technology. Just to give you an example, Goldman Sachs, someone wrote some analysis the other day. Goldman Sachs new jobs listing contains 47% technology jobs.
Right. So in a way, some jobs have been eradicated, but the technology has created new job opportunities in different areas as well.
Absolutely, and quite frankly, it's so important for board of directors these days to have this vision, to have the roadmap, to understand where this technology is going, in order to be able to have the time not only to adopt this technology, but also to convert their workforce into what I call digital workforce. You need time, you need to retrain these people, and it takes time, not a long time. I mean, 6 months' time, you can learn to code.
Right.
It's
Okay.
not a problem.
We have a few minutes left. I want to talk about data because we know artificial intelligence relies a lot on big data to sort of think and work things out.
Yeah.
Does that mean that only the larger banks, the larger companies will benefit from such technology? The smaller players will eventually lose out?
No, the short answer is no. There is a set of technologies which have been developed recently, which allows algorithms to learn from previous experience, previous information. So I would say largest data sets are ideal, but they're not necessary. So to answer your questions, AI is not only for the big banks, AI is for the smaller banks. It's just the need, the vision, and the mindset needs to change, and to engage the board level executives to adopt this technology and have the vision and understand that without it, they will disappear.
Is that the biggest challenge right now? I mean, when you speak to banks, to boards, is that their response? Are they sort of a bit hesitant in moving forward?
Yes. There is a big challenge.
Yeah.
They think that this technology is just not going to happen, well, at least not until they retire, some of them. But this technology will happen faster, quicker, and once it happens and it affects their business, there's no way back. It's just one way out.
So at this point in time now, who is leading the way? Which are the countries that are at the forefront of adopting AI?
When you look at this, I would say that you need to have like possibly three criteria. You need to look at the amount of investment, 4 criteria. The amount of investments, the number of patents out. You also need to look at how much work they've put into ethics and governance. You need to look at the number of people they've touched. And I think China is leading in investments, in patents, and number of people they've touched with this technology. And the number are just phenomenally large. And they are leading the pack. And I think the Western world have done a very good job to progress the discussion around AI ethics and governance. And I don't think there's a winner. I think there's a global effort in understanding and deploying responsibly this technology, because we all will benefit.
Well, it sounds like we're still some ways away from getting there. Well, Clara, thank you so much for coming in.
My pleasure.
Speaking with us.
Thank you.
Fascinating stuff there, I thought, actually, and the idea about global ethics, because we're just scratching the surface when it comes to AI, artificial intelligence.
Yeah.
Incredible possibilities by the sounds of it. I'm really pleased you got a chance to speak to her. So if that sparked your interest, you can find out more about AI from Clara at her InnoTribe session, and that's tomorrow at 3:30.
I think we'll be talking about it for times to come because it's something that's a bit new, so we're a little bit nervous and hesitant about it. Well, coming up in just a short while, Monday's big interview, we'll be speaking to the Chief Marketing Officer of Swift. But first, if you manage to get a bit of downtime to yourself, and Toronto has some of the best shopping and dining experiences you'll find in the whole of North America.
So here's just a glimpse of some of the treats, including some great places to eat featured in the Toronto Perks Guide. Let's have a look. Yorkville in Midtown is your first port of call if you want to splash out on some upscale shopping. If you're after a Canadian gift to take home, Drake General Store supports homegrown artists and designers. The Distillery District east of downtown is an essential stop. It's home to a mix of cafes and restaurants, eclectic shops and art galleries. Toronto is a real cosmopolitan mix with different neighbourhoods offering cuisine from all over the world. Set on a strip of College Street, Buzzy Little Italy's main draw is its classic pizzerias, trattorias and gelato shops. In any city, Chinatown is always a place to visit, and Toronto doesn't disappoint. Ethnic Chinese from Hong Kong, Singapore, Taiwan and Vietnam run a vast selection of shops and fruit markets. And there's dozens of authentic restaurants to tempt your taste buds. If you'd like to use your Toronto key perks, try the Sultan's Tent, a French-Moroccan restaurant with belly dancing every night. After a few margaritas, maybe you'd like to join in the fun and give your hips a shakedown. Alternatively, the Epic at Fairmont Royal York offers fine dining with seasonal and sustainable ingredients. They even grow their own produce on the rooftop garden, 14 stories up. And be sure to try one of their delicious cocktails. Well, it's a tough choice, isn't it? There's so much on offer. However, we're trying to get around as many restaurants as possible. Do you notice I actually featured the Fairmont Royal York Hotel?
Oh, okay.
Which Prince Harry likes to stay in. I haven't spotted him around town. I know he was here.
You've been stalking that place, haven't you?
No, not at all. But I tell you what, they used to do a fantastic lobster pasta dish.
I see.
And the other night we were there, didn't we? And they stopped doing it, but they did it specially for Stephen.
Well, we did ask nicely. They said it was on the menu about 3-4 years ago. Yeah. So, nonetheless, there are many things out and about Toronto, so do make some time to visit. Well, last year we did hear a lot about Swift's GPI, the Global Payments Innovation Initiative. It means the Swift community can take advantage of emerging technologies. So to update us on the progress since then, we're joined by the Chief Marketing Officer of Swift, Christian Serafides. Christian, welcome. Good to see you again.
Hello.
Lovely to have you back. This is 3 times in a row for us. We love having you back, Christian.
It is a pleasure for me to be here.
Good, indeed. And I know Swift's GPI initiative is really making progress. So could you give us an update on that progress?
Yeah, absolutely. Yeah, the momentum is great. We started 2 years ago, basically from a call for action. We sat together with the global transaction banks, and there was a call for action to do something about the experience in international payments. And now we are 2 years down the road. I must say that I'm quite proud by the progress we have done. What happened since then, actually, we turbocharged the existing rails at Swift. We innovated a lot. We came with the tracker application, where banks can access the tracking information of payment and expose this to the corporates. We designed or invented the concept of the unique identifier through the correspondent banking chain to identify the payment end to end. So that's really great progress. Now, what happened last year when I was here, I remember I was sharing with you what we have done. We were piloting, building the product, and everything was ready. And the big challenge for 2017 was to go in production and see what is going to happen. Well, I'm very pleased to say that we started in January with no messages, and now as we speak, 120 banks already onboarded GPI. We expect 40 of them to be in production by the end of the year, but as we speak now, already 24 are in production. Tens of thousands of messages every day, over 2 million messages already since the beginning of the year. That's quite impressive. Over 100 corridors covering 75% of the cross-border payment. But more importantly, and the reason why we have created GPI, and I always like to remind everybody that this is the result of a collaborative innovation, co-creation, the banks together with Swift. Why we've done this? Better speed, better transparency, better traceability. We checked the statistics. All the payments are credited below 24 hours. So the GPI rulebooks, of course, works, but more importantly, actually in the majority of the cases, more than half is even a couple of hours, and sometimes a couple of minutes. So that's really great.
A happy man.
Absolutely. Maybe I can share with you the different phases. So as we see, the first phase was the bootstrap phase to build the product and the concept. The second phase is about the adoption. That's where we are actually. And so next year I'd like to share even more about the adoption of this phase. And the third phase that I do see is the open marketplace, where we are going to continue to innovate together with the fintechs. So the collaborative innovation is very important. The banks, the fintechs, and Swift, and adding services on top of GPI. So these are the three different phases that we do see.
We can certainly see you're very passionate about this project, you know. So tell us, why do you think GPI will make such a difference?
I think we didn't do a traditional mistake that people tend to do in the industry, starting from the technology and be in search of a problem. We started from the customer pain point, the friction on the market, understand the end customer pain points, and we came up with our solution. So if I talk, the end customer in that case are the corporates, they were looking to have a better experience in international payments. Why is that? They want to improve the supply chain because international payments are impacting their own supply chain to decide, for example, when they're going to ship a container from one country to another country. It's also improving their liquidity management processes, and so corporate treasurers were really looking for that. And not forget also that by having the credit confirmation below 1 day, it is also reducing the FX risk exposure that they be. So there was a clear demand and expectation from the end client. So this is why I believe GPI makes a difference.
And I know you surveyed corporate treasurers about what they want from global financial trade management. What did you actually learn from this Eurofinance survey?
Yeah, that was great. Actually, we released the results of this survey last week. We've done this with Eurofinance. It's quite interesting. These have confirmed all the different pain points I was just referring to for corporates. They want to see better speed, better traceability, credit confirmation. They want to have a visibility on the fees from the bank and a consistency between the money that they send and what the beneficiary is getting. But the number one priority that they all pointed out is actually the real-time payment tracking. And we believe that looking at all of this, we are meeting really the expectation of the corporates. And we had some other discussions with the corporates during the survey, asking them, would they consider working, for example, with alternative payment providers? Actually, only 8% of them replied that, yes, they do. They're already working with alternative providers. But the vast majority, they don't do that for a certain number of reasons. They want to have a secure network, so security is very, very important. They also want to have a proper governance in the international payments. That's basically, and the standardization was the last point. I was looking for the last one. Then standardization was the last key point that they raised. So very interesting results from the corporate treasurers.
So it sounds like it was well worth doing that survey then, gave you some great insights.
Oh yeah, absolutely, yeah. And I can see now in terms of awareness that more and more corporates are aware about GPI and they are demanding, they are requesting banks to offer the GPI services. So we can feel the pressure from the large corporates to the banks to get the GPI services. This results even in the RFPs that they are sending to the banks. We can see that. Yeah.
And that's great because where there is demand, then there must be supply. So, well, you've been doing a bit of crystal ball gazing, planning for the future. There was a paper co-written with the Boston Consulting Group. So tell us, what is the future like?
I would love to have a crystal ball, actually. Well, as you hear all over the places over here, correspondent banking is in full transformation all over the places. And there are a certain number of driving forces that are leading to this. Of course, the number one, I believe, is the customer experience, and we already alluded to a little bit earlier. The end clients, they're expecting more real-time experience. They want a more digital experience when they deal with their bank. So this is an important driving force. The other driving force, I would say, is the emergence of alternative providers, bringing some innovation. Innovation can come obviously from the technology, but can also come from different business models. If I can make an easy analogy with Uber, they didn't come with a completely different technology. They're still using the highways and they're using the cars, but the business model is completely different. So that's the second driving force, an alternative payment provider. And the third one, I would say, is probably the regulatory activism. This is increasing the complexity for the banks to operate for international payments. It makes it more complex, but also more costly. So all these driving force together are putting a lot of pressure. The cost of doing business is more complicated. There is a need to reinvent themselves. So therefore, all the banks need to review their business cases. But what we observed out of this paper is that the situation doesn't look exactly the same for the large ETBs, the medium-sized bank, as the small banks. So we believe, and that this is part of the conclusion of the paper, that the large bank, the large ETBs, They have the scale, they have the size, they continue to invest, and they are pretty good in integrating new technology. They're going to continue to do this. If you look at the smaller banks, well, they're going to continue to develop close relationship with the preferred clients, and everything that is related to the international payments, they will probably consider outsourcing this to large players. And so here comes the tension for the mid-sized banks. So what are they going to do about this? Because they have different branches in different countries. How are they going to do this? Yeah. Having in mind the three different forces, so they'll have to rethink their business model. And we also believe that sometimes some regulation can lead also to some opportunities. Let's think about the open banking, so PSD2 in Europe or PSR in the UK. Obviously, it has to go. It has to be adopted by next year in 2018. But banks, the mid-sized bank, may take this as an opportunity to rethink their channels toward their banks. So not see it as a burden, but rather as an opportunity, and rethink the way they're doing business with the end clients.
So quite a few challenges there. Now, how about new technology? Will that have a major role to play in shaping the future? It's got to, hasn't it, surely?
Yeah, it already does, actually. If you look at what we already have done, I said it a little bit earlier, we innovated a lot. We turbocharge our existing engines, so this is already in motion, but we believe this is obviously going to continue. So as an example, I'll give you actually two examples. The one is in the area of APIs. So today there are two ways to access our tracking information, is with the traditional Swift messages, but also with the API. So banks can access this information via APIs. And already today we have a bank, NAB in Australia, for example, live using the APIs. Another great example is, and reflecting exactly what I said early on, looking for the pain point of the clients and then see how the technology can answer this pain point, is in the area of DLT, distributed ledger technology. We are very interested by this technology, and we decided a few months ago to work together with banks in addressing the pain point of the Nostro Vostro reconciliation for banks. So we started a POC, a proof of concept, with 6 banks. Another 27 banks were interested also to validate the result of this. And I must acknowledge that the preliminary results of this POC are very positive. And we are going to share a report with our conclusion by the end of November. But 33 banks were already participating to this POC. So to confirm what you said, yes, technology is going clearly to play a role in the future.
Mm-hmm. Yeah. What about disruptive technologies? Are there any concerns from Swift's positioning towards the fintechs bringing disruptive technologies into financial services?
Yeah, that's a great question, obviously. We do see all these technologies, whether they are disruptive or not, as opportunities for Swift to evolve. The key core value of Swift is that we offer a very rich ubiquity. 11,000 institutions are connected to Swift, and all the banks, we are integrated in all the back office of the banks. So as soon as there is a new technology, I think we're extremely strong and agile to integrate this technology in what we already do. Are we going to do everything ourselves? No. So therefore, the collaborative innovation is extremely important. And we have a framework at Swift, and you referred to it a little bit earlier today, is InnoTribe. We have a framework called the Industry Challenges, and what we are looking at is working together with fintechs, coming with this disruptive technology, exposing our GPI platform with our APIs, and ask them to add value, overlay services on top of GPI. And another great example of this strategy at Swift is what we have done 3 weeks ago in Singapore. We had a global event, an industry challenge on GPI. We had 40 banks joining this event around the world. We selected 100 fintechs from different markets, different areas. We selected 5 finalists, and 2 have been awarded, 2 winners. One is AccessPay and the other one is Assembly, and they're adding indeed additional value towards end clients, so the corporates. And if you pass by to InnoTribe, we are showcasing these 2 fintechs. So absolutely important, the collaborative innovation with these fintechs.
So well, Christian, fantastic to have you again, and looking forward to you coming back next year on SibosTV when you have to update us on the GPI initiative and so much more. I think he's done a little bit of nice co-creation creation with us this afternoon, Christian.
Absolutely. Thank you. With great pleasure next year.
Thank
you.
Thank you.
Well, the business of banking is at a pivotal moment right now because many of the established revenue streams are not as profitable because of the costs of increased regulation.
And there's fierce competition from fintechs who are targeting the most lucrative services. But new opportunities are opening up for banks, especially those created by powerful new cloud-based technologies.
Earlier, I spoke to Peter Hazou, the Director of Industry Solutions at Microsoft, to talk us through some of these opportunities. And I started off by asking him about the public cloud and how it supports banking transformation.
So the public cloud is something quite different than conceiving it as a big data center in the sky. It's really a platform. It's a series of technologies joined together that offer a lot of capabilities that banks can use to build on. It's a core platform in the whole part of banking and the industry transformation that's going on. If you think back to Sibos 10 years ago, when the financial crisis first hit, and you alluded to some of the changes in business model and revenue drivers that are really changing the entire business that the banks need to do. So the cloud represents a really key part in that transformation. It really permits banks to develop new services and new platforms in entirely new ways to fulfill customer needs. So it's quite a big change.
And how are banks looking to the cloud for these solutions and these platforms to help them in their business?
Well, so it's really a platform. It's not, banks have to develop their own capabilities on it, their own products, their own customer propositions. But the point is that it's got a lot of very powerful technologies. It's really an intelligent, it brings a level of intelligence to the product development process through data analytics, through automation, through artificial intelligence, through cognitive services. There's so many elements that are just in the essence of the cloud fabric that are there to be leveraged as banks think about what their business needs are to serve clients in the new economy.
Are banks leveraging on those platforms, or are they still lagging behind slightly?
So it's a journey. It's no secret the banking industry has been, for a variety of very good reasons, one of the slower industries to really adopt the cloud. It's remarkable how quickly that's changing now. The issue is it's not a single technology. It's just not about blockchain. It's just not about artificial intelligence. It's not about machine learning. It's a whole series of cloud-enabled technologies that are coming all at the same time. So banks are doing proof of concepts. They're figuring out how to leverage this. They're coming up with very new and very innovative models. They're doing proof of concepts to test it out. So it's a bit of a journey that the banks are undertaking. But it's amazing how quickly it's happening. Thinking back to this Sibos a year ago, a very different situation. Banks were talking in theory about how to leverage the cloud. Now there's a lot of things going on, a lot of very practical cloud-first solutions around payments, around trade finance, around a lot of the core things that bankers do. It's entirely entering a new way to build and compete, really.
Right. Well, cybersecurity has been a key theme over the years and still today. I mean, they're saying if it's not my own server, how can I ensure that things are safe?
Yeah, I mean, very true, and it's a very tricky subject. Cyber is a fact of life, and it's here to stay, and it's a threat to everybody. And I think banks are the old traditional data center model, where you build a moat and you hope to keep out anything. I mean, the nature of cyber attacks these days is quite advanced and quite specialized. I mean, the one thing about the public cloud is the amount of investment it takes, the billions it takes to really understand the threats and to build protections. It's actually a core design. It's the architecting in of protections. And of course, that's one of the challenges with the old data center models, is that they have a certain starting point as designed historically. So everybody's trying to play catch up. But the thing about the cloud is it's designed with telemetry, it's designed with a lot of things as capabilities to understand and help better fend off. So enormous investments. In fact, individual banks to remediate for the upcoming threat of cyber is very difficult. So I think there's a really good story around the cloud and the trusted cloud and how to go about doing that.
What about differentiation? How will banks be able to differentiate themselves if everyone's on the cloud?
So, I mean, one of the good things about the cloud as a platform is actually it doesn't have capabilities. Products need to develop, banks need to develop their own products. for their own customers and their own propositions. The idea is that this is a platform with a lot of built-in capabilities that can be leveraged. So each bank has to design their own products, and there's some very innovative things going on in terms of new business models, but even in terms of old business models and how to bring in things like robotic process automation to actually make things more efficient inside a bank, free up resources to do other things at a lower cost, because the entire process around the cloud is just you pay for what you consume. So it's a very different model than running a big data center.
And how are companies like Microsoft helping banks bridge that divide and make that transformation?
So the process that we have through our account teams, we operate on a very strategic level with banks and their CIOs and their CTOs, talking about what their challenges are. The lines of business are the main targets in a way. Those are the ones that need to transform. So bank product managers need to think, what is the need, what need do I need to do, how to incorporate through APIs, external parties like fintechs, and how to make better propositions that serve clients. Really true client-centric way. Banks have talked about that for years, but the cloud technology now permits them to do that. So there are a lot of proof of concepts, a lot of use of the new technology, but we're really just at the beginning. The only thing I can say is it's changing very fast.
Perhaps you can share with us just a few examples of where some of these successes have worked, where companies like Microsoft have been able to help them develop and...
Sure. So there's a number of topics that are quite big now. Artificial intelligence, we have quite a number of proof of concepts going on with different banks around how to adopt artificial intelligence. We have here at Sibos major announcements with a number of very big players, software providers in the ecosystem launching payments in the cloud. Really, when you think about it, the thing about the cloud is it's real-time, 24/7, 365. So for example, to do faster payments around the clock, bank data centers are not really able to support that in a very real-time way. So payments is a huge area. I think you'll see throughout this week with launches that it's really a new focus. So there's a lot happening, particularly for the adoption of PSD2 in Europe, but also real-time immediate payments globally is a major space that banks are looking at. But there's many others. I mean, it's just a fraction. Office operating in the cloud, office software. There's so many different areas. It's really a really big movement in the industry.
Sounds like we're kind of just at the tip of the iceberg, so to speak.
Yes, very much so.
Well, Peter, thank you so much.
Great, lovely. Thank you for having me.
Well, the one thing I realize is that with the cloud, there are so many options and opportunities that are available. So, I mean, it will take some time for people to get on the cloud and get used to that, but there's a whole world waiting out there.
As I said, tip of the iceberg.
There you go.
Well, transactions are being disrupted on multiple fronts, and fintechs and powerful new computer technologies are challenging traditional banks, and corporate customers are seeing dramatic increase in the number of low-value transactions they're having to handle.
So how are the established players fighting back? I spoke to John Gibbons, head of global transaction banking at Deutsche Bank earlier, and asked him to describe what he saw as the threats and opportunities.
So I think the transaction banking landscape is looking pretty exciting right now. There's a lot of focus on it, and there's a lot of energy around it. So let me talk about the focus on it. So companies are realizing that they need to partner with transaction banks that can truly facilitate their global business models. Secondly, in terms of focus, banks all over the world are considering what are the high returning, steady businesses that are core to the relationships that they want to maintain. That's the second area of focus. And then in terms of energy, there's new technologies and there's new client demands that are out there that transaction banks are facing that they never had to face before, that are creating both challenges and opportunities for transaction banks.
So it sounds like there are quite a few things happening, but if you had to pinpoint a few of the challenges, what would be the main challenge at this point in time?
I think one of the biggest challenges that we have is that our customers have become quite accustomed to their mobile phone experience for their own financial services need. And it's easy, and it's fast, and it's 24/7. And they're bringing those same expectations into the institutional space where they want that same instant information, easy access, 24/7 knowledge and activity around their institutional business. And I think that's one of the greatest opportunities and challenges for us in the transaction banking space.
Well, I mean, that's because consumers are so used to getting things instantly and everything's on your smartphone.
They are.
Why is that a big challenge for you guys?
They are, because what you have to do is you have to connect what's going on that you are doing for that customer all over the world. I mean, the global banks like ourselves, we are in 40 markets and operating with customers across 40 markets. They want to know real time what's going on in every single one of those markets. Not just in terms of the activity they're doing with us today, but also what is it that they can do? How can they become more efficient? How can they grow their own business in those markets, leveraging the information, the knowledge that we have?
And how is that also an opportunity for you guys?
It's fantastic. If you think about the opportunity to bring that local knowledge to your clients is absolutely huge, but actually understanding those markets and having the depth of experience in those markets that you can be truly credible and that you can truly be the first phone call for your client, that is a significant advantage for any of the banks that are already operating on a global scale.
Will that require a significant investment on your part to sort of bridge that gap?
Well, from a Deutsche Bank point of view, we are already operating in over 40 markets around the world, and we're serving customers for over 150 markets. So we don't need to invest in the markets as much as what we want to do is to continue to invest in our platforms that allow us to bring all that knowledge to our customer in the most easily accessible way that we can, so that they can operate their businesses in the most efficient manner possible.
Well, that's going to be a challenge too, because your platform and their platform may not be the same platform.
But that doesn't matter anymore. One of the great opportunities with the new technology is this concept of open architecture, right? So we need to be able to interact with our clients really using whatever technology they want to use and whatever interface they want to use, and then we have to make sure that we make that readily available for them. And that is part of what we are already doing for our customers. We want to do more of it, but that shouldn't be a barrier to working with your clients.
Which also makes it challenging for guys like you, because if it's open architecture, I can choose to work or partner with any bank out there. Why would I pick someone like Deutsche Bank?
The open architecture is a very small component of what you do, and you'd say, I would argue it's a ticket of entry in the marketplace today. You have to be able to work with your clients' technology in the way that they want you to work with them. The reality is that's not where my value proposition is going to come from. My value proposition is going to come from the fact that we bring balance sheet, we bring brains, we bring capabilities, and we bring geographies that match up with the markets that our customers are operating in, that match up with the needs that they have from us, that match up with the capital raising needs that they have. That's where our value proposition is going to come, not from the open architecture.
So you're saying it's a full suite of services, it's not just one point?
It has to be, and it's one of the great advantages for a bank. Okay, that you know, the big banks and those that are operating on a global scale can bring multiple different services to a customer such that they're able to integrate them in a way that makes their operation much more efficient.
And how soon can this happen?
Oh, it's happening today. It's happening today. It happens every single day for us, okay? I think what we're trying to do is to make it happen more regularly, better, faster, cheaper, everywhere you go, everywhere in the world.
So if I had to ask you to pinpoint sort of an end goal, I mean, when you see the guy on his phone doing what, would be a sign for you to say, okay, we've arrived at that point?
I would love for our clients to feel that their relationship with us at an institutional level was as seamless and as easy as the relationship they have as a consumer. And whether that's dealing with, you know, their retail banking account or whether it's dealing with the online marketplaces that they have found are so simple and easy to adopt. I'd love for customers to do that. But I also want them to do that, to feel that way about us within the context of also the trust that we bring to them as a financial institution and the knowledge that we bring to them having operated in these markets for decades. And you know, that is a very, very important factor for our clients, is actually saying you can help me be successful in the markets that I want to participate in.
Now, with all these changes happening, I mean, someone like Deutsche Bank, who's been around for a long time, you know, I mean, compared to, I guess, other new players, do you find that there are many new entrants trying to enter the market as well to get a piece of the pie?
I think there's a lot of new entrants in the marketplace looking at various pieces of the pie. And I think that the advantage that we have at Deutsche Bank is the fact that we already have an extremely large customer base. We have a very large experience with those clients. We have a very, very diverse and deep network of countries. We have a very diverse array of products that we can deploy against meeting the full suite of needs that our clients have, not just one individual slice of that. And if you think about it, every client we work with They want to globalize, they want to centralize, and they want to simplify.
Right.
Working with one single partner, either in a region or in a business line, helps them achieve that much greater than perhaps all of these new entrants who say, I want to do just one narrow slice of what you have to get done every day.
Yeah, and that's a big one, because I want to do more, but I want to do it more easily and more simply, right?
Of course.
So, what about cybersecurity then? Because with so many things based on technology, there are more concerns that the security of it may be a bit more vulnerable.
Cybersecurity is a huge topic for the entire industry, and it should be. We have to make sure that we are protecting our clients financially and that the clients know how to protect themselves as well. And I think we're here at the Sibos conference sponsored by Swift, and they have quite an important cybersecurity program underway, which we and many other institutions, and we're all out there, we're going to participate in to make sure that we maintain a safe perimeter around the funds transfer and other security settlement and other types of business that Swift is a part of.
If I ask you to look around the world, I mean, where do you think they've got it, or they're doing it the most right now in terms of this kind of transaction banking? If we looked at a region like Asia compared to Europe or rest of the world, you know?
I think in transaction banking, there's exciting pockets of activity going on everywhere in the world. If I think about India, for example, and we were the first bank there in India to actually go to a completely paperless, free import trade environment. Very, very exciting what's going on there. If you think about what's going on in other markets around the world with instant payments or faster payments, that's happening in multiple places around the world. So I think what you see is lots of activity in many different markets around the world. And what we all need to get ready for and what we're all preparing for is where those activities are going to take place everywhere. They're not going to be the exceptions. They're not going to be the experiments. They're not going to be the new frontiers. They're going to be the standard way of doing business.
Do you see that happening soon? I mean,
absolutely. It's happening at such a rapid pace.
But these are usually, I mean, high volume of transactions, but low value. Is that something that, you know, makes sense for guys like you?
High volume, low value, low volume, high value. It's all going to have to get there, okay? If you think about it, we as individuals, our expectations have changed. And the reality is the technology is enabling that to happen. And as a transaction banking institution at Deutsche Bank, it's our job to make sure that we bring that to our customers.
How much of it is from the consumer saying, I'm a bit concerned, I'm not ready, maybe you're too fast for me, you know, I don't dare use the technology yet because would I send $100,000 from phone to phone? I don't know.
Look, you know, one of the things about being an institution that serves other institutional needs is you have to do that within the environment that they operate in, whether that is a compliance environment, a security environment, a financial risk management environment, it doesn't matter. But the fact is that we have different customers who will move at different speeds based upon their own businesses, based upon their own technology capabilities, based upon their own business models, right? And our job is to make sure that we are well positioned to satisfy whatever those business models are. Always, of course, staying safe and sound and making sure that we're protecting ourselves and protecting the industry and protecting our customers. But everybody's going to move at a different speed. We have to make sure that we're ready to help them move at the speed that is most appropriate to them.
All right, just very quickly, a bit of crystal ball gazing. If you could fix one thing, do something now to help move all this along, what would it be?
If I was going to do something to help it move it along, I would say that it would be a wonderful opportunities for governments and banks around the world to come together to try to standardize as much as possible the various infrastructures that exist for settlements around the world so that we can get to a more common operating environment on a global basis.
I had a great chat with John, but you might have noticed a few knocks and bangs in the background. That's because we recorded the interview during the build of the exhibition.
It was very noisy.
Not too, well, we were really glad anyhow to catch up with John Gibbons and to get his insights.
Yes, as we've heard, significant change will affect the transaction industry over the next few years. And it's interesting to see who are the winners and losers in the future. There's always going to be winners and losers.
That is true. But for now, that's about it for this edition of Lunch with Sibos.
Yes, and just to let you know, after our program, next up on SibosTV is the big issue debate, which will look at how most companies are making the transition to digital enterprises with more and more customer interactions and business processes taking place online.
So what does the cybersecurity team need to do to create the trust and facilitate the innovation required for digital businesses to develop?
So coming up is the answer to that question, this afternoon's big issue debate on cybersecurity and digitisation, the art of securing the digital enterprise.
It will be moderated by James Kaplan, co-lead for McKinsey's IT infrastructure and cybersecurity practices. A really diverse panel there, representing the full spectrum of interested parties.
We certainly have, because on the panel is Michelle Howard, Admiral in the US Navy, as well as Rohan Amin, Global Chief Information Security Officer at JP Morgan.
Also Deputy Chairman of the Executive Board at Cyberbank, Stanislav Kuznetsov, and hacker, inventor and technology futurist Pablos Holman.
So that's all from us. We'll both be back for you at 3 o'clock for Sibos Today. Have a great afternoon.
See you later.